Hey guys, welcome to my channel, City Talks. And I'm City, and today I'm gonna be discussing about 10th class chapter 1 GST Goods and Services Tax. Today I'm gonna be discovering 5 topics: introduction to taxes, types of taxes in the Indian government, characteristics of GST tax, types of GST, and reverse charge mechanism. So you may get a question. What are taxes and why are they there? So, let's find out. Taxes are an amount of money that the government requires people to pay according to their income, the value of their property, etc., and that is used to pay for the things done by the government. Okay, so how many types of taxes are there? So, there are mainly two types of taxes: direct tax and indirect tax. Direct tax is a tax that a person or an organization has to pay tax directly to the government account. Let me tell you an example so that you can understand this better. Imagine you own a company or any type of corporation. Direct tax is imposed on your net income or profit, which means you should give a certain amount of money of your earning directly to the government. Okay, moving on to indirect tax. It's a tax on goods and services you buy, which is collected by an individual or an organization and deposited with the government. Let me tell you an example again. So, when you go to the grocery shop to buy a packet of chips or anything, your wish, when you take it from the grocery shop, the grocery shop gets it from the wholesaler. The wholesaler gets it from the manufacturer. So, let's start with the manufacturer. He makes the lollipop for 100 rupees and GST for 12%, which means 12 rupees. In total makes 112 rupees. So, next the manufacturer gives a tax invoice to the wholesaler that the value of the lollipop is 100 rupees and the GST of it is 12 rupees. Now, 100 rupees is called the taxable value, and the wholesaler, when the manufacturer sells it to the wholesaler, the chips packet value increases to 150 and the GST to 18 rupees, which is calculated as 150 into 12. The total becomes 168 rupees. Now finally, the grocery store sells it to you for 200 and GST at 24 rupees, which is 12% of 200. And the total for your giant chips packet is 224 rupees. Okay, now let's see the amount of tax collected. The manufacturer collects 12 rupees, the wholesaler 18 rupees, and the grocery store 24 rupees. This money is deposited to the government. The total tax is 54. Let's see the percentage. If we calculate the percentage, it comes out to be 27%. But we assume the tax to be 12%, right? It's not fair. Let's see. When the manufacturer sells the packet of chips to the wholesaler, he gets 12 rupees as GST from the wholesaler and pays it to the government whole. Next, the wholesaler gets 18 rupees from the grocery store but doesn't deposit the entire amount. He removes the amount of GST he paid to the manufacturer, so he pays 6 rupees to the government. Now, the grocery store took 24 rupees from you and deducts the money from which he gave to the wholesaler, which is 24 minus 18 rupees, which is the 6 rupees, and pays it to the government. So now the government gets 24 rupees. When we take the percentage, it's exactly 12%. Now, what is so different that we did here that we didn't do before? Let's see. The government gets the tax on value added by each participant, which means the manufacturer added 100 rupees to the chips packet and 12 rupees tax. Next, the wholesaler added 50 rupees value and 6 rupees tax. The grocery shop owner added again 50 rupees and 6 rupees tax. So now the manufacturer 12 rupees was an output tax, and the wholesaler he collected 18 rupees tax from the grocery store, which is called the output tax, and paid 12 rupees tax for the manufacturer, which is called the input tax. Same follows for the grocery store. Let's move on to some characteristics of goods and services tax. GST is GST is a comprehensive indirect tax for the whole nation. It makes India one unified common market. Taxes which not include under GST are road tax, toll tax, property tax, and electricity duty tax, entertainment tax, or taxes on liquor, etc. Only a person or organization registered under GST is authorized to charge and collect GST on the sale or transfer of goods and services. GST is a value added tax. For any individual or organization, the GST paid on purchases is called the input GST, and the GST collection on sale of goods is called the output GST. Say a organization or individual X, the input GST is set off against which is claimed, the output GST, and the difference between the two is payable to the government. Thus, for an individual or organization X, GST is levied on the incremental value of the goods or services supplied by him. The one country, one tax system. This is a uniform GST rate on any particular goods or services across all the states and union territories of India. Assam was the first state to implement GST, while Jammu and Kashmir was the last. GST is also destination based tax or a consumption tax. This means that in case of an interstate supply, only the state which is in the goods or service which the goods and services are actually consumed will get the tax benefit irrespective of the state producing it. Let's move on to GST rate slabs. GST rate slabs are the fixed rate of GST on a particular item, such as edibles, fuel, medicines, footwear, etc. Let's move on to some benefits of GST. Benefits of GST are GST is beneficial for each of these three stakeholders. Benefits for traders, which are it's a simple tax system and it has elimination of multiplicity of taxes and development of common market nationwide. And it also reduces the cascading effect of taxation over taxes. Benefits for consumers. It's a single and transparent tax and increase in of purchasing of power and savings. Elimination of this cascading effect, which is taxation over taxes, has resulted in the reduction in the cost of goods and services. Benefits for the government. It's a single tax system which is simple and easy to administer. If there were multiple tax systems, it would have been hard to administer. It has a higher revenue efficiency and better control on leakage and tax evasion. So let's move on the types of GSTs in India. In India, there are three types of GSTs: CGST, SGST, and IGST. Let's go to CGST. CGST for any interstate supply, which means supply within the state, half of the GST is collected as the output GST and deposited with the central government as CGST, Central Goods and Services Tax. State GST, which also can be named as Union Territory GST, means for any local supply within the same state or union territory, half of the output GST is deposited with respective of state or union territory government as the beneficiary, is known as SGST or UGST. Integrated GST or IGST, the GST levied on the supply of goods or services in case of interstate trade within India or in case of exports and imports are known as GSTs. For example, if you take CGST, the prescribed GST rate is 12% and the half of it is 6%. So the CGST will be 6%. Same case with the SGST or UGST also. In IGST, it follows the prescribed GST rate. If the GST rate is 12%, then the IGST rate will also be 12%. Let's go to the reverse charge mechanism. If the supply normally seller GST from buyer and the buyer pays it to the government. However, in some cases, the buyer pays GST directly to the government. Some of those cases are if the supplier vendor is not registered under GST while the receiver is registered, services provided by an advocate or a law firm, services provided by an author, photographer, artist, or any music composer, etc. etc. 2. A publisher, producer, or a music company, etc. Number 4. Services provided by an insurance agent to any person who carries an on insurance business, tax on insurance commission. That's it for today. Thanks for watching and never forget that never stop learning because life never stops teaching. Please like, share, subscribe, and hit the bell icon for more amazing videos like this one.